Hey everybody, welcome back to the channel. It is Tuesday, April 14th, the day before tax day. Hope you all did your taxes. I spent all day doing my taxes. It was miserable, as you can imagine, but we're done with that. And yeah, I meant to do one of these videos yesterday, but that didn't happen because, well, a couple reasons. I didn't even actually trade yesterday because I bought another house yesterday, and I spent all morning at the title company doing the closing on the house. So that took me out of my trading game yesterday, and I was just busy with so many things yesterday. I didn't have time to make one of these videos. And today, I traded today, had a real nice day, 45% for nearly $800 profit on Amazon and SPY. I traded a handful of contracts on Amazon and one contract on the SPY. And I've said on this channel before, there are occasionally moments where I will get in like the first minute of the day or the first couple of minutes of the day. Most of the time, I like to wait until at least 5 to 10 minutes until the market has kind of unfolded before I'll jump in. But there are specific things that I sometimes see that will make me want to jump in almost immediately. And I saw that today on Amazon. And I was going to make a dedicated video just about that, but then I got so wrapped up in doing my taxes all day long today that I just didn't get around to that either. So maybe tomorrow I'll do a video just about my Amazon trade today. Although I got a total of just under $800 today, about 90% of that was within the first 10 minutes. And it's just, I saw a certain thing happening in the first minute of the day on Amazon. I jumped in and then it just ripped. So maybe I will do a dedicated video about that tomorrow or the next day. We'll see. But anyway, let's get into the news today. So here's the thing about earnings season. The number is almost never the whole story. And today was a perfect example. 3 of Wall Street's biggest banks reported this morning. JP Morgan crushed estimates, EPS of $5.94 against a $5.46 expectation, revenue over $50 billion. Sounds like a buy, right? Guess what? The stock dipped. Wells Fargo technically beat on earnings per share too, down 6.6%, the worst single-day performance in over a year. Then there's Citigroup. Big beat, raised the narrative, up 1.5%. Same earnings season, 3 completely different outcomes. And here's why. This is what traders call guidance overrides the beat. The number you see in the headlines is backwards looking, what's already happened. But what the market actually trades on is what's coming next. JP Morgan trimmed its full-year net interest income guidance from $104.5 billion to $103 billion. That's a signal that the easy money from high interest rates is fading. Sold. Wells Fargo missed on revenue and offered soft forward guidance. Sold harder. Citi beat and delivered a credible improvement story. Bought. But here's where today gets interesting, because none of that bank drama stopped the broader market from ripping higher. The S&P 500 closed at 69.67, up over 1%, and is now within arm's reach of all-time highs. The Nasdaq tacked on 1.8%, its 10th straight up session for the Nasdaq 100, the longest winning streak since 2021. So what's powering all this? 2 things. First, oil fell hard. WTI crude dipped into the mid-90s as peace talk optimism around the Iran conflict keeps building. I don't personally believe anything until it actually happens, but I understand that Other people will take politicians at their word. And so when a politician says something, people, for some reason, believe them, and then the market reacts accordingly. J.D. Vance told reporters that there's been a, quote, lot of progress out of the Islamabad negotiations, and Pakistan is arranging a second round. When oil drops, it functions like a tax cut for the entire economy. Lower input costs, lower transportation costs, lower inflation pressure. Which brings us to the second thing. This morning's PPI report was a massive inflation surprise. The producer price index came in at just 0.5% for March against an estimate of 1.1. Core CPI, 0.1%. That's the Fed getting breathing room it didn't have 3 weeks ago when oil was north of $110 a barrel. The market looks at that number and says cuts are still on the table. So where does that leave us? Bank of America reports tomorrow. If JP Morgan's guidance warning is a trend, you'll see that reflected in the price. Watch the guidance, not the beat. That's been the trade recently, and tomorrow will tell us if that trend will continue. So that's it for today. Have a good evening, and hopefully if I don't get wrapped up in something too crazy tomorrow, I'll be back here to do another one of these videos tomorrow afternoon. Bye-bye, everybody.